Most people fail to become millionaires not because they pick the wrong investments, but because their brains are evolutionarily wired to make terrible financial decisions. Think about it. Human psychology is hardwired for immediate survival and instant dopamine rewards. But building long-term wealth requires the exact opposite: delayed gratification and absolute emotional control. When the stock market dips, your brain screams at you to panic and sell. When a meme stock pumps, your FOMO forces you to buy at the top. This emotional roller coaster is exactly why the average retail investor constantly loses money. But what if you could outsmart your own psychology? The world's smartest investors don't rely on luck. They use financial tools that automate discipline and eliminate human error. And the absolute best tool for this is the exchange-traded fund, or ETF. In this video, we are combining business psychology with smart investing to reveal 4 powerful ETFs that can turn you into a millionaire over the next 10 years. We are going beyond the dry numbers to look at the consumer neuroscience and behavioral hacks that will give you the psychological edge to stay invested when everyone else is panicking. If you are ready to master the mental code of wealth, make sure to subscribe to Business Psychology. Now, let's decode the first asset. What if I told you that the biggest enemy standing between you and wealth isn't the market, it's your own brain? The proposed investment fund is VOO, the Vanguard S&P 500 ETF. The business strategy is simple: direct investment in the 500 strongest American companies that lead the global economy. But here's where it gets psychological. The real game is playing on something called anchoring bias, or the anchor effect. Investors always tend to panic whenever any temporary drop happens in the market. Watching the portfolio lose value daily triggers psychological loss pain and pushes people to sell early. This fund succeeds because it forces the brain into automatic discipline. It completely removes human emotions from daily trading decisions. While emotional traders lose fortunes in panic, the VOO investor stays calm and lets compounding do its magic. The S&P 500 isn't just an index. It's a psychological fortress built to protect you from yourself. By eliminating daily decision-making, it turns your greatest weakness into your greatest strength: patient, long-term thinking. That's the true power of VOO. It's not just an investment, it's emotional armor for your wealth. Part 2. The tech giant and the control over the FOMO trap. The proposed investment fund, QQQM, Invesco NASDAQ 100 ETF. The business strategy? Intense focus on technology companies and artificial intelligence that lead the future commerce revolution. The psychological analysis? Controlling FOMO, or the fear of missing out. Novice investors lose their money chasing random stocks and cryptocurrencies in search of quick wealth. This fund satisfies the brain's psychological need to see growth and progress in the portfolio, but it places this growth in a safe and diversified basket, giving the viewer the thrill of profits without the destructive psychological anxiety. QQQM focuses on the NASDAQ 100, the 100 largest non-financial companies on the exchange. This means your money is distributed across tech giants like Apple, Microsoft, Amazon, and Nvidia. Instead of gambling on a single stock, you own a piece of the entire innovation economy. The fund turns the dangerous FOMO impulse into disciplined long-term growth. Most investors fail, not because of bad strategy, but because their brain can't wait 10 years to see results. This is where SCHD enters, the Schwab US Dividend Equity ETF, a psychological fortress designed to solve the human impatience problem. The fund's strategy is simple yet brilliant. Target giant, financially stable corporations with a long history of consistently distributing cash dividends to their shareholders. These aren't startups or risky ventures. These are the titans of American industry, companies that have survived decades and proven their endurance. But the real genius isn't in the companies themselves. It's in the psychological design of the fund's payout system. Human nature hates delayed gratification. We struggle deeply with the concept of waiting years without seeing tangible rewards. SCHD solves this psychological crisis through quarterly dividend distributions. cash flowing into your bank account every 3 months like clockwork. Seeing liquid money enter your account regularly creates what psychologists call a reward dopamine loop, a positive feedback cycle that keeps you engaged. This isn't just about money, it's about brain chemistry. Each dividend payment triggers a small dopamine release, reinforcing your decision to stay invested. The quarterly rewards act as psychological checkpoints, mini victories that build confidence and prevent the emotional panic that makes investors sell during market dips. This is behavioral finance engineering at its finest, using small, consistent rewards to override the human brain's tendency to make impulsive, fear-based decisions. SCHD doesn't just build wealth, it builds the mental resilience required to stay the course and let compounding work its magic over decades.
Most people fail at investing, not because they pick the wrong stocks, but because their brain is wired wrong. The proposed investment fund is VUG, the Vanguard Growth ETF, designed to accelerate growth and amplify capital. The business strategy combines 4 funds together using dollar-cost averaging, a fixed periodic investment mechanism. The psychological analysis reveals a brutal truth. The human mind evolved to understand simple linear growth, not exponential compound growth. In the first 3 years, the investor feels the numbers move painfully slowly. This is where most people quit out of frustration. Your goal in this part is to shift the viewer's mindset from chasing quick income to embracing patient, strategic investing. The real financial explosion and the trap of millions begins to appear between year 7 and year 10 as a result of psychological discipline. This is the power of compound interest, invisible in the beginning, unstoppable at the end. Average investors panic and sell during the slow years, never experiencing the exponential explosion that comes later. The millionaire mindset is not about intelligence, it's about emotional endurance and the ability to delay gratification. Billion-dollar math is simple on paper but brutal in practice because it demands you do nothing while others panic. Follow us for more.